The euro has slipped more than 20% this calendar year. We'll tell you all the reasons behind that on the show this morning. Also, news coming in that Zepto is likely to file its IPO papers as early as this month. That's right, December could see fresh IPO filing from the quick commerce firm Zepto. And of course, foreign funds, FPIs and FIIs continue to exit the Indian markets, and that's putting pressure on the stock market. Remember, yesterday, Sensex lost more than 500 points and Nifty 50 closed 160 points lower. It seems that indications are weak, even as markets are just about 15 minutes from opening. We'll get you all the updates on that with Gaurang Shah, who joins us on the show this morning. This is Morning Brief at 9 right here on News 9 this Wednesday morning. Here are the headlines that we're tracking for you. The Indian rupee slumps to a new low, touches the 91 rupee mark in intraday trade yesterday before settling a little better at still 90 rupees and 93 paisa against the US dollar. But it's not just the USD against which the rupee has slumped. This year has seen the rupee perform worse against other currencies, including euro, Australian dollar, as well as the dirham. India's November trade deficit numbers spring up a positive surprise against the October lows of over $40 billion. November data suggests that despite the high 50% tariff on Indian exports from the US, India continued to increase its exports to the United States. Indigo has pipped its rival Air India combined, both Air India and Air India Express, in international flights and the passengers that it carried in the July to September quarter. But remember, data from DGCA comes in the months succeeding just after the Ahmedabad tragic crash of Air India. A bulk deal at Ola Electric. Founder Bhavish Agarwal has sold 2.62 crore shares at a value of about 35 rupees a share. The company says no financial or operations implications, and the company is trying to just deleverage and pay off its debt. Zepto is likely to file its IPO papers soon. Reports indicate that the quick commerce 10-minute delivery platform is likely to file its IPO papers as early as this month, December 2025. Foreign outflows continue to hurt the Indian stock markets. Remember, Sensex crashed about 600 points yesterday. Nifty 50 fell well below the 25,000 levels. All this at a time when the rupee continues to depreciate and the India-US trade deal hangs in balance. Air pollution continues to haunt Delhi NCR and the rest of the country. The big question looming over the government and citizens is whether this crisis can ever end. Is India taking its air crisis seriously? We'll get you views on that. In global news, US President Donald Trump is likely to address the nation today ahead of completing 1 year in the Oval Office for his second term. Meanwhile, Donald Trump and the US administration has put the $40 billion technology deal with the United Kingdom on hold pertaining to digital laws. Those were the headlines. On to the big story that we're tracking for you this entire week, and especially coming after data that came in from intraday trading yesterday. The Indian rupee on Tuesday slid to a fresh record low, breaching the 91 per dollar mark for the very first time during intraday trade before recovering slightly and closing the day at 90 rupees 93 paisa against the US dollar. No concrete update on the India-US trade deal, coupled with foreign investors cashing out of both Indian equities and bond markets, continue to put pressure on the Indian currency. Now, this year alone, the Indian rupee has dipped 6% against the US dollar. Now, this time, the only culprit is not the strong US dollar. In fact, the US dollar index has been hovering in the below 100 range at 98 to 99 levels. The rupee has been hit worse against other currencies, including the euro and pound. Now, remember, the rupee has slipped 21% against the euro. It has slipped almost 14% against the pound. A similar weakness has also been seen for the Indian rupee against the Australian dollar, and the rupee has slipped almost 8% or so against the yen. The fall against dirham continues to be in line with the slip against the US dollar at about 6.2%. Now, among its Asian peers too, the Indian rupee is the most depreciated currency this calendar year. Now, despite big FDI commitments by big tech, including the cumulative $67.5 billion worth investments committed by Amazon, Microsoft and Google in the last 3 months, global capital has swung towards other perceived AI winners. This includes markets in the United States, South Korea as well as Taiwan. Emerging markets and Asia-focused funds have been losers with massive fund outflows. Moreover, the Reserve Bank of India's open market operations on stabilizing the rupee have been limited, where the central bank says it does not want to peg the rupee to a certain value against the US dollar, but only manage volatility. Now, while the fall in the rupee value against the US dollar is bad news for Indians traveling abroad, the impact on the economy poses mixed signals. The biggest hit is likely to be for India's import of oil, followed by the massive import deficit owing to gold imports that in any case are at record high valuations, both in terms of price as well as volume of imports. But on the export front, the story is brighter. India's MSMEs and export-oriented manufacturing sector is likely to gain with the fall in the value of the Indian rupee, as dollar-denominated value of exports will bring in more rupee-equivalent cash for exporters. Meanwhile, India's trade numbers delivered a positive surprise in the month of November. Exports jumped to their strongest November level in over a decade, while imports cooled sharply after the spike the numbers saw in the month of October. The result was the biggest month-on-month correction in India's trade deficit this year. November's data offers the much-needed relief amid global tariff pressures and slowing growth risks. India's trade deficit has declined to a 5-month low of just $24.53 billion in the month of November, driven by a fall in gold, oil and coal imports, while exports to the US have picked up, government trade data showed. Now, economists had expected that the November trade deficit would be in the range of about $32 billion, according to a Reuters poll, compared to a record deficit of $41.68 billion in the month of October. Merchandise export to the United States has in fact risen nearly 10% month-on-month to a volume of $6.92 billion in the month of November. Now, this came after exports to the US fell nearly 9% year-on-year to $6.31 billion in October, though they were higher than the $5.47 billion in the month of September. India's overall merchandise exports rose to $38.13 billion in November from $34.38 billion in October, while imports fell to $62.66 billion from the $76 billion in October. Merchandise exports to the United States, which is India's largest export market, rose over 21% on a year-on-year basis in November compared to $5.71 billion in November 2024. Now, Prime Minister Narendra Modi's government has rolled out measures including consumer tax cuts, an export promotion package and labor reforms to cushion the economy from the impact of steep US tariffs. Remember, Modi also spoke with US President Donald Trump last week. While New Delhi seeks relief on key export lines, Washington is pushing India to lower tariffs and non-tariff barriers on US goods and open its market to American farm products, including soybean and grain sorghum. Moving on to the world of aviation and the Indian skies. Well, data from the Director General of Civil Aviation shows that Indigo has picked Air India as the carrier of choice for Indians travelling abroad. Now, data from July to September 2025, the immediate quarter after the horrific Air India 171 Ahmedabad crash, more passengers preferred to fly abroad on Indigo planes over Air India's. Now, the two Tata Group airlines, Air India and Air India Express, flew a cumulative 41 lakh international passengers from India, while Indigo flew as many as 41 lakh and 36,000 passengers. Now, this spurt came largely from a 15% reduction in Air India flights, mostly on the wide-body Dreamliner routes. Remember, that's the same aircraft which had crashed in Ahmedabad, the AI-171. Now, despite the worst December yet for budget carriers owing to chaos over flight cancellations and delays owing to potential roster mismanagement by Indigo due to the new flight duty and rest rules, Indigo continued to beat the industry average on flight cancellations too. Now, in the first 9 days of December, December 1st to December 9th, the worst affected period for domestic passengers, Indigo cancelled only 2.4% of its international flights of about 2,700 odd routes, while domestic cancellations were much higher at 25%. Remember, DGCA continues to probe Indigo over flight disruptions caused during that period. It is important to note that Indigo commands over 60% market share in India's aviation market, with Air India combined under 25%. Now, with the regulators saying it will intervene to ensure Indian skies do not turn into a monopoly and curbing Indigo's winter schedule by 10%, will Air India and the Air India combined now get a boost? We'll keep an eye on those numbers for you for subsequent quarters. And moving on to corporate news now, Ola Electric's mobility founder and chief executive officer Bhavish Aggarwal yesterday sold over 2.62 crore equity shares of the company through a bulk deal. This according to data available on the National Stock Exchange. Bulk deal disclosures show that Bhavish Aggarwal offloaded the shares at an average price of about 35 rupees per share. The transaction was executed in a single block on December 16th and involved a partial monetization of the promoter's personal shareholding. In an official statement, Ola Electric clarified that the share sale was a one-time move aimed at repaying a promoter-level loan. In addition, that the transaction was also carried out entirely at the promoter's personal level. The company further disclosed that following the repayment, all previously pledged shares representing about 3.93% of the equity will be fully released. Post the transaction, the promoters group stake in Ola Electric will stand at close to one-third or about 34% of the company. Ola Electric emphasized that the transaction does not signal any reduction in promoter commitment or confidence in the company's long-term prospects. The management reiterated that maintaining a zero-pledge structure is central to the founder's philosophy, and the transaction will have no impact on the company's operations, governance framework or strategic direction. As per shareholding data for the quarter ended September 2025, promoters and the promoter group held 36.78% of stake at Ola Electric Mobility Limited, according to information available on the BSE. Meanwhile, Ola Electric shares witnessed sharp selling pressure following the disclosure. The stock closed at 34 rupees 50 paisa on Tuesday, down 7.7% from its Monday close. And in other news from startups in India, Bengaluru-based quick commerce startup Zepto is preparing to file for an IPO in December, possibly within the next few days, as per news reports. The proposed IPO is expected to raise about $750 to $800 million. The quick commerce firm's IPO is likely to comprise a mix of fresh issue and offer for sale by existing shareholders, with the proceeds set to be used for business expansion. According to those news reports, discussions are still ongoing and key details, including the issue size and timeline, are yet to be frozen. The 10-minute delivery platform is reportedly likely working with Axis Bank, Motilal Oswal Investment Advisors and the local units of Morgan Stanley, HSBC and Goldman Sachs to file its draft prospectus through the confidential route. Zepto's order volumes and net sales value have surged about 45% over the past 6 months, with the platform now handling close to 2 million orders a day. Its cash burn is said to be in a downward trajectory, aided by higher throughput of around 2,000 orders per store per day. In addition to that, supply chain automation and reduction in customer acquisition costs. The company is also sitting on an estimated 7,000 crore rupees of cash, and reports suggest it could have the largest net cash position among new age companies heading to the public markets, including Swiggy, Meesho as well as Lenskart. Now, looking ahead, the company plans to add a few hundred new stores over the next 5 months, expanding beyond the current network of over 1,000 dark stores. The proposed IPO comes after an aggressive funding run over the past 18 months. Zepto raised as much as $665 million in June 2024 at a valuation of $3.6 billion. Followed by that was a $340 million infusion in August this year. That took the valuation to $5 billion, and then another $350 million all-domestic fundraise in November 2024. Now remember, founded in 2022 by Adit Palicha and Kavalya Vora, both 19 years old then, Zepto's rise from delivering groceries on bicycles during the pandemic to becoming a $7 billion tech company ranks among India's fastest startup scale-ups. Breathing poison, and that's the campaign News9 is running. Now, cigarette packets come with a warning: smoking kills. Delhi does not. But at AQI levels dancing in the 500-odd range every single day, the average Delhi NCR resident is effectively smoking the equivalent of 25 to 30 cigarettes a day without lighting a single one. Now, this isn't activist exaggeration. It is a comparison drawn from air quality exposure studies and real-time pollution readings. Government monitoring stations are reporting AQI readings around 500. Independent platforms such as AQI.in have shown levels swinging between the 600 to 900 range every single day. Now, News9 cannot independently vouch for the absolute accuracy of either data set. But here's the uncomfortable truth. Whether the AQI is 500 or 900, the air is officially hazardous. And yet, once again, the response feels fairly familiar. The government has activated the Graded Response Action Plan, or GRAP, to stage 4, its more severe category. But reading after reading, one reality becomes painfully clear. GRAP cannot grapple with pollution. At best, it can shut down construction sites, stop diesel trucks from entering the city, ban firewood, and keep children at home. But GRAP cannot blow wind over Delhi NCR to push pollutants away, nor can it stop internal combustion engine vehicles from plying or prevent stubble burning across state borders. Air pollution is not an inconvenience anymore, it is an emergency. Even the Supreme Court has repeatedly said, calling air pollution a public health crisis and comparing the situation in parts of North India to a gas chamber. So the real question is no longer whether GRAP has been implemented. The question is, what will it take for governments to act beyond emergency mode? Because GRAP is not preventive, it is reactive. It kicks in after the air turns poisonous, not before. Now consider this, the economics of breathing. The average Delhi resident pays roughly 1.8 lakh rupees in direct income tax to the government every single year. That's about 15,000 rupees a month or 500 rupees a day. But this 500 rupees a day cannot buy clean air to breathe. If you add GST to the number, it even multiplies further. Yet the most basic breathable air remains unaffordable. And the real cost of pollution is far higher than hospital bills. According to medical and economic assessments, including a Times of India opinion piece last month, points out that air pollution is now the single largest threat to life expectancy in India. The analysis points out that Delhiites live 5 to 7 years less on average due to chronic exposure to polluted air, a loss that doesn't just shorten lives but also shrinks India's economic output. This means fewer productive years, lower lifetime earnings, reduced tax collections, higher healthcare spending, and lower productivity for the country at large. Ultimately, a direct hit to India's GDP. As air pollution isn't just choking lungs, it's shrinking the economy. So what exactly is poisoning Delhi's air? Well, obviously, vehicle emissions, especially diesel, construction dust, industrial pollution, stubble burning in neighboring states, firewood and biomass burning, firecrackers, and then comes the final trap, weather conditions that lock pollution over the Indo-Gangetic Plain. Now, some of these are structural, some are policy failures, and many are entirely predictable every single year. So every winter, we scramble, we ban, we restrict, we suffer. Then pollution dips, attention fades, and we wait until next year. Every winter, Delhi waits to choke before acting. Every year, children are told to stay indoors. Every year, offices carry on as if lungs are expendable. This is not a failure of one policy. This is a structural failure of how India treats the air it breathes. And the longer real solutions are delayed, cleaner transport, regional coordination, agricultural reform, and strict enforcement, the more toxic the cost becomes. For our lungs, for our children, and for our future. Because clean air is not a luxury. It is the most basic promise a state owes its citizens. And Delhi is still waiting for it. And before we slip into a short break, the IPL 2026 player auction concluded in Abu Dhabi late last evening, delivering drama, big money moments, and a few hard-to-explain snubs as well, as franchises reshape their squads with an eye on both immediate impact and long-term gains. A fierce bidding for Cameron Green grabbed headlines. The Australian all-rounder emerged as the costliest overseas buy in IPL history. The 25.20 crore winning bid by Kolkata Knight Riders underlined the premium teams are willing to pay for players who offer flexibility with both bat and ball. Several Indian names, however, had a far tougher day. Prithvi Shaw once again failed to attract early interest, slipping through the main rounds before finding a late lifeline from Delhi Capitals at his 75 lakh rupee base price. Sarfaraz Khan, despite eye-catching domestic performances, also struggled to generate bidding momentum. Chennai Super Kings eventually rewarded the Mumbai batter's resilience, signing him on at 75 lakh rupees base price. The all-rounders remained at the centre of the debate. England's Liam Livingstone, known for his explosive hitting and utility value, failed to trigger the expected bidding war. However, Venkatesh Iyer's auction outcome witnessed a dramatic valuation drop from 23.75 crore rupee contract last season with KKR to just 7 crore rupees this year with Royal Challengers Bengaluru. Now, turning to Chennai Super Kings, who entered the auction with clear intent after a disappointing previous campaign, CSK opted for a calculated rebuild, backing youth while retaining experience at the core. After picking up Sarfaraz Khan in the accelerated round at base price, CSK made bold, intensive bids for two uncapped Indian youngsters, Prashant Veer and Karthik Sharma, securing both with identical winning bids at 14.2 crore rupees. As the gavel falls, the one thing becomes clear: the auction has set the stage for a season where strategy may matter as much as star power. The real verdict, as always, will come on the field. And time for a short break. Coming up on the other side, the opening action at the Lal Street. We'll bring you a perspective on why foreign funds continue to exit India with Gaurang Shah. So stay tuned and don't go anywhere.
क्वालिटी पे इतना कॉन्फिडेंस, इसीलिए बिरला ऑफिस एश्योरेंस। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे। रजिस्टर करो birlaoffice.com पर।
अपनी सुपर पावर यूज करने का टाइम आ गया।
आप टेंशन मत लीजिए, IIFL फाइनेंस से झटपट गोल्ड लोन लीजिए और बिजनेस आगे बढ़ाइए।
लाइफ जब भी आगे बढ़ने का मौका दे, अपनी सुपर पावर, अपना गोल्ड यूज करिए और IIFL फाइनेंस से गोल्ड लोन लीजिए।
IIFL फाइनेंस करता है सीधी बात।
Okay, 2026, take notes. Manifesting. More bubbles, less troubles. For my little Miss Sunshine, tickles and giggles. Also wanna be a biker chick this time. Vroom, vroom. And dear 2026, only love for my people and myself. To manifest my best life, nature's cosmic energy. Now mine, natural diamond intention pendants.
सामने नया सुपरमार्केट खुलने वाला है। क्या करूं कि पुराने कस्टमर भी रहें और नए भी आ जाएं?
देखो, आप दुकान के बाहर एक चाय कॉर्नर लगा सकते हो। चाय पीते पीते पुराने कस्टमर बातचीत करेंगे, उन्हें देखकर नए कस्टमर भी आएंगे और एक्स्ट्रा कमाई भी होगी। इसके अलावा आपके बिल्स देख के समझ लेते हैं कि कौन सा सामान कितना बिका है।
Our honorary speaker, Megha Vishwanath, the quintessential storyteller, weaving narratives defining global economy, her book Unseen chronicles the journey of Zomato's Dipinder Goyal. Eastern India's first business and economy literature festival 2025, 20th and 21st December, Taj Tal Kutir, Kolkata.
Presented by EIILM Kolkata. Associate sponsor, Bama Lorry, Mukhorochuk, Alliance Broadband, Priyogopal Bishoi, and ChatGPT.
Welcome back and thank you for staying tuned in to News9. This is Morning Brief at 9. Let's bring you all the action from Dalal Street as markets have opened to a positive green this morning. We are looking at Sensex and Nifty recovering from the massive cuts that we saw yesterday, mostly owing to FPI exits, which have continued to be the flavor of the month, if not the flavor of the whole year. So after that 500 plus fall in Sensex yesterday, this morning we are seeing the Sensex is up back towards, at least inching very slightly towards that 85,000 level. This morning standing at 84,822. Remember, this could just be value buying that we are seeing in the market right now in the absence of any fresh triggers that by way of news could impact investor sentiment. Meanwhile, Nifty 50 also now at 25,900 odd levels, but remember, still about 900 odd points below, I beg your pardon, about 100 points below that 26,000 level. Let's pull up the Nifty 50 heat map and see where are the gains coming from, and expectedly the gains are coming from the technology stocks this morning, and this of course is taking a cue from US markets, which again finished in the green as trading ended early morning India time, late night in the US. So tech stocks including TCS, HCL Tech, Infosys, Wipro, all in the positive territory this morning. Reliance is inching up about 0.4 of a percentage point. Now this comes perhaps on back of the slight increase that we've seen in oil prices yesterday. In addition to that, there seems to be a little bit of a mixed bag in the consumer durable space, while Maruti Suzuki and Mahindra are in the green this morning. Bajaj Auto has slumped about 1/5 of a percentage point or so. Bharti Airtel continues its winning streak even this morning. Yesterday, this was among the only aberrations when markets opened. The stock was in the green, and even this morning, the stock is about 0.5 percentage point. Well, remember, all that we are seeing could potentially change with the Indian rupee still slumping to new lows against the US dollar. Gaurang Shah is here to explain to us the impact of the slumping Indian rupee. Gaurang, I want to begin with that and we will come to the market mood subsequently. Indian rupee slumping to the 91 against the dollar mark yesterday before closing slightly better. Now, again, some say that this is a chicken and egg situation. It is the foreign flows, the foreign outflows, which are leading to the rupee tanking. And some say the rupee tanking is actually expediting the exit of foreign flows. Which of the two is it?
Thank you so much for having me on the show. Morning to all your viewers. A small disclaimer before we go ahead that all recommendations that I'll be sharing with you this morning on the equity side are a part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might hold their investment interest. So I think, look, the thing is, by this weekend or early next week, because next week, 25th, Thursday, we have the Christmas. So I think the FI stroke FPI selling that we are witnessing, which is relentlessly continuing, this is likely to possibly ease off by this weekend or early next week. Some amount of strength coming back into the rupee is something that we expect next week because of the dollar demand going down, because of the slowdown or a momentary stop in the FI stroke FPI selling. This week also, we saw RBI supply dollar when it crossed over to 90 earlier on the weakness against the dollar rupee INR. We saw at that point of time also RBI supply dollar, but it did not seems to get any kind of long-term durable strength in the INR against the dollar. So this will continue. It will have its own positive and negative impact. Positive impact on the export-oriented companies and sectors, and negative impact in terms of imports. So it's a flip-flop. By next week, we should see some amount of stability in the Indian rupee. And on the markets overall, I think it's good to see this range-bound trade. I think 25,700, 800 on the lower side, 26,000 on the higher side on the Nifty spot. I think we would possibly just pack off this year near about this range, unless and until you have some pleasant surprise from the global arena.
Okay, that pleasant surprise from the global arena is something that markets and investors, both retail, DIIs as well as FIIs, sitting on the fringe seem to be waiting for, but no concrete measures, no concrete decisions yet on the India-US trade deal. And you're mentioning the markets continue to be range-bound, but the markets are potentially expecting the deal to come through, but that deal continues to be elusive, Mr. Shah. So I want to understand, in case we continue to be in this limbo, then can we expect the markets to stay in the range of about, let's say, the 26,000 odd levels plus minus 200-300 points for, let's say, till as long as it takes for the deal to come through?
I don't think as long as it takes, Karthik, because okay, on the deal front, I think the Honorable Minister Piyush Goyal has also made a couple of statements. Day before yesterday, Commerce Secretary made a statement. Discussion between both the countries, India and US, and their counterparts, representatives, have reached almost the final stage. Yesterday, in fact, Karthik, I was reading a report that US has agreed that they will not demand the entry into agri-stroke dairy sector, which they have been demanding, and they have agreed to that. I hope that is right, whatever I read.
Yeah.
There is no confirmed source that I can possibly name over here.
Right.
I am quite sure, Karthik, that from 10th of Jan onwards, when there will be a curtain raiser for the third quarter earning, we are possibly preparing ourselves for a decent positive Q3 earning, which will give a little bit of more stability to the market. And then after that, I think Feb, we will have the curtain raiser for the budget also. I'm sure it's going to be a growth-oriented budget with employment being focused and easing of certain policies which were redundant, replace it by a new policy.
Right.
So Q3 earning and budget could be the trigger for market to possibly move a little bit more higher up from here on. On the deal front, my personal take, Karthik, is let it take as much time as it takes. And the fact that when the deal was not done, we made a new lifetime high on the Sensex and Nifty.
Absolutely. But, I also want to talk a minute more on the slumping Indian rupee, Mr. Shah. And this comes on the fact that it's not just against the US dollar that the Indian rupee has weakened. In fact, the Indian rupee has weakened even against the British pound, and India has an FTA with UK. It has also weakened against the Australian dollar, and we are talking, trade expansion with Australia. It has fallen the most against the euro, and the India-EU FTA potentially seems to be in a closer kissing distance than the India-US trade deal. Despite all of that, and of course, great data coming on the export front in November, India's trade deficit has sort of narrowed. Despite that, we are seeing that the Indian rupee continues to be in a tailspin.
So this is purely because of the demand, dollar demand, and I don't think there is anything great that has happened in terms of minus the FI stroke FPI selling and taking dollars back home. I don't think there is anything serious significant that the rupee has to depreciate further from these levels in the near future. Yes, trade agreement talks are in virtual final stages with some countries. We are also into trade agreement or bilateral trade discussion with some of the Middle East countries. So my sense is that near-term pain, Karthik, could be there for some time. But like I mentioned, come next week, I think most of our friends from the FPI, FI category are going to go for Christmas holiday. They'll come back possibly in first weekend or second week of Jan 2026, and then they'll take it forward. So my sense, I still say the same thing that I mentioned, Karthik, that from next week onwards, we should see some amount of stability in the dollar.
All right.
I beg your pardon, in the rupee against the dollar.
In the rupee against the dollar, sure. We will wait for next week, and let's hope that that your sort of analysis of this entire situation comes true. But meanwhile, I want to discuss some sectors with you, especially the IT sector this morning, which is taking positive cues from the US market. But there are also contradictory reports which are suggesting that a lot of the FPI outflows that we are seeing in the Indian markets is actually flight of capital to AI centers, and this includes the US, this includes South Korea, this includes Taiwan. So a lot of even Asia-focused funds are parking investments in AI centers. Meanwhile, Indian IT services story continues to be a services story and not really an AI product story. How do you view, barring, you know, these aberrations that we are seeing with respect to US markets on the IT stocks, how do you see the Indian IT story poised for 2026?
So Karthik, even when the President of the United States of America, Mr. Donald Trump, made the initial announcement of tariff on 180 plus countries on April 2nd, if I'm not mistaken.
Yeah.
There was a lot of
Liberation Day, as he called it,
for the Indian IT company. And large part of people in the market were telling you to stay away from Indian IT.
Right.
Because they expected a doomsday. Fast forward to the second quarter earning that we saw, and the verbatim from the management in terms of the outlook of business. So as a brokerage house, we remain positive even on that particular day, 2nd of April, when the tariffs were announced. Post that, though there was a lot of negative sentiments on the Indian IT company, even now and going into the future. So we have investment ideas across small cap, mid cap, large cap IT companies, Karthik. And my sense is that though there is this, you know, a new AI bubble or a doom kind of a scenario, I think Indian IT is still a little bit more insulated with respect to the kind of advanced stage that American and Chinese companies are in. And valuations have run up to a great extent. Earnings still remains a challenge to get delivered. And if they don't get delivered, Karthik, the earnings, then I think we should prepare some amount of steep correction in the US/Chinese AI-related companies.
So that rebalance could potentially be in the making, but a lot depends on the earnings. Now, earnings in Q3, Mr. Shah, are expected to, at least on the back of the rise in demand that we saw owing to GST cuts, Q3 is likely to spring up a good number. But are there concerns around Q4 owing to the fact that there could be inflation, especially inflation in electronics? And there were reports that ACs and fridges and television sets could become a little more expensive come Jan. So is inflation going to be potentially a worry for Q4 numbers as we get into Jan?
Karthik, look, just before summer, that is end of Feb and early stages of March, we'll have the onset of summer. And like we've been witnessing, summers are getting hotter and hotter. Demand for high-end consumer durable goods are not only limited now to metros, Tier 1, Tier 2, Tier 3 cities, Karthik, but the major part of the demand is going to come in from semi-urban and rural India, and that's where the aspirations are going up. Earlier, you know, fan and coolers were a luxury over there, but now
ACs are mainstay.
So my sense is that earnings have, you know, income levels, I beg your pardon, have gone up because of good monsoon and good agri output.
Yeah.
Direct cash transfer benefit has its own positive impact. A marginal increase for an AC or a high-end consumer durable appliances is not going to deter the end consumer wanting to spend. Yeah. So I think one should take it in its stride, and I don't think that inflation and high prices could be a spoilsport for demand.
All right, Mr. Shah, let's leave it at that. Pleasure having you here with us on News9. As always, thank you for your input. And before we slip into another break, here is a quick look at the global headlines that we're tracking for you. US President Donald Trump will deliver a televised address Wednesday, hailing what he calls a great year since returning to the Oval Office, even as voter frustration grows over inflation, jobs and economic uncertainty. The US puts the $40 billion technology agreement with Britain on hold, citing concerns over London's digital rules and food standards, a setback to UK's post-Brexit trade ambitions. Meanwhile, America warns of countermeasures against the European Union's tech regulations, accusing Brussels of unfairly targeting American firms and signaling European companies could face retaliation. Donald Trump announces blockade on sanctioned oil vessels entering and leaving Venezuela, sharply escalating pressure on President Nicolás Maduro and tightening control over crude exports. Donald Trump moves to block foreigners deemed to intend to threaten Americans, expanding the U.S. travel ban to nations and nationals from 7 more countries, including Syria and Palestine. Trump stands by his chief of staff, Susie Wills, even as she said the U.S. president had an alcoholic's personality in an astonishing interview with Vanity Fair. American hiring beats expectations in November as job growth recovers from an October slump, but unemployment rate climbs to 4.6%, the highest in more than 4 years. Streaming giant Netflix says it will keep Warner Brothers films in theaters if its takeover bid succeeds, seeking to calm Hollywood fears as it moves deeper into traditional filmmaking. A coalition of app makers press European regulators to crack down on iPhone maker Apple, arguing its free structure unfairly disadvantages EU developers after a key US court ruling. We'll get you these stories after a short break. You're watching Morning Brief at 9 right here on News9.
यही मौका है बिजनेस को बढ़ाने का, पर पैसा।
अपनी सुपर पावर यूज करने का टाइम आ गया है।
आप टेंशन मत लीजिए, IIFL फाइनेंस से झटपट गोल्ड लोन लीजिए और बिजनेस आगे बढ़ाइए।
आपके जैसे सुपर हीरोज ऐसी छोटी मोटी प्रॉब्लम से थोड़ी ना रुकते हैं, इसीलिए लाइफ जब भी आगे बढ़ने का मौका दे तो अपनी सुपर पावर, अपना गोल्ड यूज करिए और IIFL फाइनेंस से गोल्ड लोन लीजिए।
IIFL फाइनेंस करता है सीधी बात।
सामने नया सुपरमार्केट खुलने वाला है, क्या करूं कि पुराने कस्टमर भी रहें और नए भी आ जाएं?
देखो, आप दुकान के बाहर एक चाय कॉर्नर लगा सकते हो। चाय पीते पीते पुराने कस्टमर बातचीत करेंगे, उन्हें देखकर नए कस्टमर भी आएंगे और एक्स्ट्रा कमाई भी होगी। इसके अलावा आपके बिल्स देख के समझ लेते हैं कि कौन सा सामान कितना बिका है।
A resurgent India is racing towards the Viksit Bharat goal, braving global economic headwinds. Bulletproofing our economy from these uncertainties are Bharat's homegrown businesses. Powered by tech-led innovation, Indian entrepreneurs are truly scaling up, riding the next wave of disruption with AI and cloud to break into the big global league. TV9 Network in association with SAP presents Visionaries of Viksit Bharat, a series celebrating inspirational business leaders shaping tomorrow. Watch them take an iconic leap at Visionaries of Viksit Bharat conclaves. Exclusively on News9.
Okay, 2026, take notes. Manifesting. More bubbles, less troubles. For my little Miss Sunshine, tickles and giggles. Also wanna be a biker chick this time. Vroom, vroom.
Allah, merci beaucoup.
And year 2026, only love for my people and myself. To manifest my best life, nature's cosmic energy. Now mine, natural diamond intention pendants.
back. You're watching News 9. This is Morning Brief at 9. Time now to move to the international stories we are following for you this Wednesday morning. Let's begin with the United States. US President Donald Trump has expanded the US travel ban on Tuesday, barring nationals from 7 more countries, including Syria, as well as Palestinian Authority passport holders. The White House said the move targets individuals who may threaten US security or undermine American values. Several African nations have been added to the new list, while partial restrictions have been imposed on countries including Nigeria and some Caribbean states. The latest move brings the tally to nearly 40, the number of countries whose citizens face restrictions coming into the United States solely by virtue of nationality, with Trump also tightening rules for routine travel between Western nations. It comes as the US president, who has long made hostility to immigration a signature issue, orders mass deportations and takes an increasingly stringent tone against non-white new Americans. Meanwhile, President Donald Trump's approval ratings has slipped again, falling to 39% according to a new poll. That's down from 41% earlier this month and near the lowest level of his current term. The slide appears to be driven by growing dissatisfaction within Trump's own Republican base, particularly over the economy. The 3-day survey, which ended Sunday, shows declining approval of Trump's handling of economic issues as inflation continues to remain elevated under his administration. The latest numbers are just 1 point above his year-low rating of 38% recorded in mid-November. The findings underscore mounting economic anxiety among voters, even as the White House faces pressure from within its own party. And US President Donald Trump has sued the BBC, seeking up to $10 billion in damages, accusing the British broadcaster of defamation over edited footage of his Jan 6, 2021 speech. Now, Trump claims the BBC spliced together remarks urging supporters to march to the Capitol and fight like hell, while omitting his calls for peaceful protest, creating a misleading impression that he incited violence. The BBC has acknowledged an error of judgment and apologized, but says it will strongly defend the case, insisting there is no legal basis for the suit.
U.S. President Donald Trump has filed a defamation suit against Britain's BBC over its editing of a speech he made in 2021 on the day his supporters stormed the U.S. Capitol.
I'm suing the BBC for putting words in my mouth, literally. They put words in my mouth. They had me saying things that I never said coming out. I guess they used AI or something. So we'll be bringing that lawsuit. A lot of people are asking, when are you bringing that lawsuit? Even the media can't believe that one. They actually put terrible words in my mouth having to do with January 6th that I didn't say.
Trump is seeking $5 billion in damages on each of 2 counts over the BBC's documentary on his role in the January 6 Capitol riot. The case was filed Monday in a Miami federal court. There was no immediate response from the BBC. The documentary, aired on the broadcaster's flagship Panorama News show, spliced together excerpts from Trump's speech, making it appear he incited the riot. Trump denies responsibility for the unrest when protesters sought to block Congress from certifying Joe Biden's 2020 victory. The BBC called the editing an error of judgment and apologized, but said Trump's claim lacks legal basis.
U.S. markets closed mixed on Tuesday. The Nasdaq recovered to finish higher, while the S&P 500 and Dow slipped, dragged down by healthcare and energy stocks. Investors are assessing delayed economic data for clues on the Federal Reserve's policy path next year. Take a look.
Wall Street's main indexes ended mixed on Tuesday, with the Dow dropping 0.6%, the S&P 500 shedding about 0.25%, while the Nasdaq gained roughly 0.25%. A delayed Labor Department report showed non-farm payrolls rebounded in November following a decline in October, and the unemployment rate rose to 4.6%. Eric Ditton is president and managing director of the Wealth Alliance.
The stock market did not like the delayed payroll numbers, even though the November numbers were higher We came in at 65,000, was supposed to be somewhere around, or 64, is supposed to come in around 45, better, but it was October that got the markets upset with a loss of 105,000 jobs, which, by the way, that makes job losses in 3 of the last 6 months, not to mention that Mr. Powell has said it's possible that we are overstating job gains by 60,000 per month. So you kind of have to scratch your head and wonder if the data is real.
After Tuesday's data, investors are pricing in interest rate cuts of at least 58 basis points next year, more than double the 25 basis points signaled by the Federal Reserve last week. Stocks on the move Tuesday included Pfizer, which slipped nearly 3.5% after the drug maker forecast a challenging 2026 due to weaker sales of COVID-19 products and squeezed margins. Fellow health insurer Humana fell 6% after the company announced unspecified leadership changes. Shares of B. Riley jumped more than 50% after the investment bank reported a profit for the second quarter. And shares of Comcast rose nearly 5.5% after CNBC financial journalist David Faber speculated about potential involvement by an activist investor.
Well, let's go deeper into that job data, which did play on investor sentiments in the U.S. U.S. job growth rebounded strongly in November, beating expectations after an October slowdown linked to government spending cuts. However, the unemployment rate rose to 4.6%, the highest level in more than 4 years, signaling mixed signals for the labor market. Take a look.
A closely watched report from the Labor Department on Tuesday offered mixed signals on the health of the U.S. jobs market. The non-farm payrolls report from the Bureau of Labor Statistics showed employers added 64,000 jobs last month, rebounding more than expected. But the unemployment rate ticked up to 4.6%, its highest level in more than 4 years. And the economy shed 105,000 jobs in October. Still, the numbers may be somewhat deceptive. One economist told Reuters that the unemployment rate, for instance, should be taken with a large grain of salt, given that data collection was disrupted by the record-long government shutdown. And October's job losses largely reflect the departure of more than 150,000 federal employees as President Trump pushes to shrink the government workforce. The Federal Reserve cut interest rates by another 0.25 percentage point last week, partly out of concern for a deteriorating labor market. Economists say employers have pulled back from hiring because of what some described as shock from Trump's sweeping import tariffs. Tuesday's jobs report also showed average hourly earnings increased 3.5% in the 12 months through November, down slightly from the prior month. While slowing wage growth helps the fight against inflation, it could dampen consumer spending, the economy's main engine.
And the United States has paused a $40 billion technology agreement with the UK, citing concerns over London's digital regulations and food standards. Take a look.
Officials have said the US has paused a $40 billion technology agreement with Britain. It's following concerns in Washington over London's approach to digital regulation and food standards. The so-called tech prosperity deal covered AI, quantum computing and civil nuclear energy, and was agreed during Donald Trump's state visit in Britain in September. Britain hailed the visit as proof of Prime Minister Keir Starmer's ability to work with Trump on trade and tech. It became the first country to agree in principle to lower some US tariffs in May. But implementation has been slow. Talks on sectors such as steel stalled, though the two sides agreed a framework pharmaceutical deal earlier this month. British officials confirmed on Tuesday that the US has paused implementation of the tech deal. The New York Times said US officials were frustrated by Britain's online safety rules, digital services tax and food safety restrictions. British ministers say the May tariff deal allowed higher US beef exports without compromising UK standards, and insist digital regulations and tax will not be negotiated away. The White House did not immediately respond to Reuters' requests for comment. The US is Britain's largest trading partner, and its big tech companies have already invested billions of dollars in their UK operations.
And before we end, the story about a group of app developers and consumer bodies in Europe up in arms against iPhone maker Apple, arguing its fee structure unfairly disadvantages European developers. We leave you with that story.
A coalition of 20 app developers and consumer groups on Tuesday called upon European regulators to enforce EU laws against Apple. They say the company's fee structure unfairly disadvantages European developers compared to their US rivals, and follows a recent court decision in the United States. The EU's Digital Markets Act mandates that large tech platforms, labelled gatekeepers, facilitate in-app transactions outside their ecosystem at no charge. The coalition's appeal reflects concerns over a disparity following a US court ruling that restricts Apple's ability to impose fees on external transactions. The European Commission earlier this year fined Apple $588 million for breaching the DMA by obstructing developers from guiding users to alternative payment methods. In response to the EU ruling, Apple revised its terms. The Coalition for Apps Fairness represents firms such as Deezer and Proton. It argues that these revised fees still violate DMA stipulations and says that US developers benefit from more favourable terms after the court decision.
Why is West trying to fuel anti-Russia sentiments before Putin's visit? Why is India important in this narrative war? Which are the red lines for the Russia that the West has crossed? And what is the Indian role here? One of the biggest bilateral agendas of the President Vladimir Putin's state visit to India. Fighters are on the agenda, sources are saying.
It is about 17 Mach of the terminal velocity. No one can shut it down.
Local production at HAL's Nashik facility that begins on December 4th is greater defense cooperation. Is it correct to say that the